Hello and welcome to my channel. This is the market analysis and charts analysis, market watch and chart analysis for the week. And this is the analysis for May 24th to 29th. All right, last week we analyzed some pairs. We looked at gold, we looked at euro dollar, and we looked at some of the ZAR pairs, the GBP ZAR, the USD ZAR. So we analyzed gold for a sell, and the market did do a very tremendous amount of sell on Monday. I mean, imagine that. On Monday, gold dropped over 200 points, and the euro dollar throughout the whole of last week, our bias for it was a buy, and the euro USD throughout last week did, I think it went about 300 pips, in buy, and also the USD and the GBP ZAR. So that was the analysis for last week. I didn't trade everything. I only traded gold, I traded the euro Swissy and the euro USD. So that's one of the things I'm going to talk about real quick before we begin to analyze the market. But before we begin, let me introduce myself. My name is Gloria Adoye, the Pips grabbing chick. I'm a Forex trader, and my goal as a trader is to profit, right? I've been trading for the past 2 years, and one of the mistakes I made earlier on in my earlier days or earlier years of trading was believing that I'll need to trade every day. I need to be on the chart every week and every time. But when I discovered a simple way to trade, when I discovered a simple strategy to trade, wherein all you have to do is look for a very good setup. It could be one, it could be two. When you find the good setup, you don't need to trade the rest. All you need to do is focus on that setup, analyze or draw up your trade plan, and then create your reason or your triggers for taking the trade. And the minute those triggers meet your criteria, you take the trade. So ever since I started doing that, I have been trading profitably. So here's what I do every trading week. I do not try to trade everything, although I analyze as many currencies as I can for the week, but I don't trade all of them. So I could just pick the best three, or I could just pick the best two, I could just take the best one. And then my risk is always between 30 to 50 pips, and I target between 100 to 200 pips. Now, if I'm able to achieve that target for the week in one day, I will not trade for the rest of the week. One of the mistakes I made earlier on in my trading career was trading every day of the week. I called myself a day trader. So I'll take a trade today, make a profit, close out, and then take another trade tomorrow, lose the profit I made yesterday, and try again tomorrow on Wednesday, make a little profit, half of what I made on Monday, and then lose it all on Thursday, and then manage to script something out on Friday. But I realized that all you need to do to be profitable in the Forex market is to have a target. Know how much you plan on losing for the week. Know how many pips, because I always rate everything in terms of pips anyway. So know how many pips you plan on losing for the week. So if you just want to lose 30 pips for the week, and if you lose it on Monday, then you know that you're done for the week. You just stay off the market. Go do something else. All right, go do something else. It could be read a book. It could be go to work, focus on your family. Spend time on your side hustle, on your business, build your dream, whatever it is you want to do. You just leave it and go do it. All right. Now, if you target to make 100 pips or 200 pips for the week, and something happened and you made it in one day, which are the things? These are some of the things that happens in the market. You could make it in one day, like what happened last week. That you need to make that in one day. Get off the market, be done for the week. Even if millions of people are coming to post charts and all that, you just look at them, cheer them on, and all that. So that's what I do. I'm not saying you should do it, but that's just what I do. In most of my trainings, I always like to share my experience, because as far as trading goes, it's not about what works. It's all about what actually works for me, for you, for all of us. So for me, what works is, well, I set a target for the week, and once I achieve that target, I'm done for the week. That's just what I do, and that is what has been helping me to profit trading the market. So for this week, the bias is still the same for the DXY. DXY is still having a bearish structure, especially with all of the uncertainties going on in the American economy. So as long as finances go, the American economy is undergoing some kind of duress, some kind of stress. Although the president of the United States is really, trying to talk his way out of all of the rumors that's been going on about the American economy, but we're still seeing them, we're sensing them nonetheless. So we still expect a little drop or more drop for the DXY. So for the first part of the week, we might see some pullback. For the first part of the week, we might see some pullback. We might see the market try to pull back because the structure we drew out last week is still here. You can see how price failed to take out this zone. Right, this is a monthly chart. So this is on a monthly chart. You can see how price failed to take out that zone. So that zone is still right there, and our sell bias is still gonna hold. So we said last week that if the DXY is bullish, dollar will be bearish. If DXY is bearish, then we're expecting a bullish dollar. So same thing also, we're expecting a bullish euro dollar. Sorry, DXY is bearish, euro dollar is bullish. DXY is bullish, euro dollar is bearish, right? DXY is dollar. So Euro USD, we're expecting a buy for it. So the buy bias is still here. The zone is still here. It hasn't been able to take out the zone. Although Monday, Tuesday, Wednesday, Thursday, the euro was selling at 1.09. Then before the close of the market, it dropped to 1.08. So it's still flirting around this zone. There's a lot of rejection around this zone. Still flirting around it. So the zone for now still holds. As long as the zone holds, we'll still look for buy opportunities. So what I'm going to do for the week, say on Monday, is to drop down to the 15 minutes time frame and look for buy. So what is likely happening here is that after that up thrust, after that straight movement to the upside, the market is trying to do a retest, a pullback, whatever it is you want to call it. So this is a clean rise, right? This is a clean rise. This was all of the move that happened. That was a very clean rise, and then we're expecting the market to give us some kind of retracement. So that retracement could be around the 61.8% or the 78.6%. So we target those zones. So I'm just gonna put this here and then see how price reacts around this zone. And that will inform my decision to take the trade. Alright, that will inform my decision to take the trade. So how the market reacts around this zone, because this is technically a break, wait for a retest, and then you trade your market. So on Monday or Tuesday, you could go check it out and see how it goes. So I'll look for entry on the 15 minutes time frame. You could check it up on all that time frames. You could check it up on the 1 hour time frame, on the 4 hours time frame. Check it up on any of those time frames and see what it's talking about. Alright, so that was the clear rise the whole of last week, and this is a retracement en route. So when the market closed last week, the retracement was, trying to find its way back. See that? Trying to find its way back, and it's coming all the way down. So I'm going to target these two zones, these two levels. That's what I'm going to do. So this is the buy structure, break of the buy structure, see a retest. It could be the retest of this zone. You know what, let me just put it here. Yeah, so eye that zone, target it, and look for entries around there. So this would serve as my buy zone, the zone where I'm looking to trade the market from. So that's for Euro USD. So the DXY is for a sell, and the euro dollar is still for a buy. But I'm going to keep my eye on the zone to be sure that the zone holds. Alright, so now let's go over to Euro AUD. Alright, so the Euro Australian dollar is still stuck right here. It's still stuck here. Hasn't really, made any serious move, serious impact. So I can't really see anything here. Let's go to the monthly time frame. Okay, so for me there is no structure to trade on Euro AUD. So I'm not even going to look at it twice. Okay, so next I'm going to go to dollar. I'm going to go to gold. Why am I always talking dollar? I think I'm becoming diabetic. So I'm going to go to gold. So gold is still around our zone. So did you miss the initial sell at last week? Don't worry, it's still coming back to give us an entry. So on the 15 minutes time frame, let's go back to 15 minutes time frame and see what it's presenting. Can you see the craziness going on around it? Now this is as a result of all of the dramas, all of the madness going on in the White House. So that initial drop, those who caught it, if they were anyway, I don't know. Well, one of the things I said about always having a target, always having a goal. Once you meet your target, get off the market. Why? Because this is a market not controlled by you. You're just a retail trader. Alright, so you don't want to get caught in all of the drama. So as soon as you make your target, you get out of the market and go enjoy your money. Okay? So the minute we caught that spike sell, we took profits and left. So what we're expecting to see now is the downtrend to continue. But if all of the uncertainties goes on, the market might still continue to float around this zone. Because after the break, it is still within the zone. It's still here, it hasn't left here, it's still here. So right now it's creating another zone. So I'm still going to keep my eye out for another sell opportunity. But I won't be selling until I see a good candlestick or a good price action. Right now there is no price action. There's just a lot of spikes, a lot of uncertainties, a lot of manipulations waiting to happen. So I am not going to enter the market until I'm certain that the manipulations are over. So somebody said, sent me a message last week that it's likely forming an inverse teacup. So an inverse teacup formation is a continuative pattern. So it's very possible that this is an inverse teacup, and then this is the handle of the teacup. So we're expecting the market to continue towards the downside. So one of the ways you can now begin to trade this is to see your price action candlestick pattern. So it could be any of those candlesticks that you trade, and once you see it, you trade the market. Alright, so right here is your teacup. That's it. Let's try it out so that you can all see it. Alright, so that's your teacup right there, and this is the regular pullback you see on a teacup. So expect the market to begin to drop. So the gold, the bias is still a sell. That's the bias for gold, still a sell. But you need to make sure you see your reversal pattern before you take the trade, so that you don't get swept by the by the craziness that might happen on gold. So we've already seen the dollar index. I've seen that it is potentially bearish. So that means every other dollar pair should be also bearish, or the USD XXX should be bearish. So I'm not going to keep wasting time and start looking at them one after the other. We're just going to go straight to one of the Swissies and the yen pair. So let's pick Euro CHF. So Euro CHF, the bias is a buy. Now this buy, when it holds, is going to be a long-term buy. So we might see the buy happen all the way up to the end of the year, up to next year even. Why? Because it's currently at a demand zone. It's currently at a demand zone. So we just want to see price, wake up. We just want to see price react. It did play out, completed this harmonic pattern this here, cleaned it out, and now we're expecting price to take us all the way up to the moon. So last week it did try to push itself up, so check out that very long spike. So this is going to be a corrective, because after every impulse there's a correction. So this is the correction that's following the impulse. Now the correction may give us a 61.8 or 78.6 level of retracement. So we could see this or we could see this. So you keep your eye on these two zones, and then you look to take your trade. Now someone sent a message and said he's scared of trading this pair, and I said, yeah, you might say that because it's heavily manipulated. So this is your zone here or here. Alright, so I'll be looking to take the trade at this point. I'll just set a buy limit at this point, and then allow the market play out. Of course, my risk will come 30 pips below my entry. And then let's take one of the yen pairs. So if you're going to be trading euro Swissy, you could either trade euro chef, or you could trade the euro yen, right? It's still the same thing. If you're buying one, you buy the other, selling one, sell the other. So you could trade euro yen or euro pair. So for the yen pair, let me do GJ, because GJ is one very nice moving currency. So for the yen pair, I'm gonna do GBP JPY. So let's go check it on the monthly time frame. Let me check GJ on the monthly time frame. Okay, so on the monthly time frame, GBP JPY is still at the point of, point of where are you going? Are we going up or are we going down? So I like to mark out my zones. It just makes everything simple. So mark out the zone and then begin to look for price action. Begin to look for market analysis. Begin to look for all of the things you can look for. So all of the things that comes to mind when you're trading. Okay. So GJ, after this sharp impulse, the market did this whole level of what you want to call it. And then technically, we should expect the market to continue. But I'm not going to be buying any GBP pairs at this time, considering that will be a serious error in judgment. What I'll be doing based off the GBPs is to be looking for sells. Why am I looking to sell the GBPs? Because they mostly have sell structures. One, there is a continuation pattern around this place, especially when you see continuation patterns at demand zones, they hold better. So there's a continuation pattern here, so I'm expecting this to continue its downward trend. Okay, that's what I'm expecting for this. That's what I'm expecting for GJ. So we're expecting more sales for GJ. Yeah, more sales for GBPs are so most of the GBP pairs. You can see how the market, see our zone right here, right? So our bias for GBPs are, I think last week and the week before that has always been a sell. So for those who has been selling this, you're in serious profit. That's one of the beautiful things about following my channel and about making sure that you don't miss out on any of the videos, because I am mostly trading based off what we see on the charts. Okay, we're not trading based off indicators or based off robots or EAs or guess tools and all that. Just trade what we see, technical analysis, the market structure and all, zone trading. So this zone held, and right now the whole of this month GBPs has been on a downtrend, and that has been our bias from the get-go. So you should always know your bias and you stick to it. So my bias for most of the GBPs is for a sell, DXY is for a sell, Euro dollar for a buy, gold for a sell, and Euro chef for a buy. So that's my bias. That's what I've been looking at the whole of last week and even this week. So price is still holding, market is still where it is. I've not seen any clear movement as of now. So that's all for this week's market watch and market analysis. Here's a parting word for you. If you're new to trading, you don't want to try to get lucky in this market. You want to make sure you know what you're doing, because when you know what you're doing, then you can begin to avoid making all the mistakes that a lot of traders make. And how can you know what you're doing, or how can you avoid the mistakes a lot of traders make? It is by trading with people who have made the mistakes, and they will be in a better position to steer you off the path of making the same mistake. And what are the mistakes traders make? They tend to overtrade. They believe that because the market is open on Mondays to Fridays, they should trade Mondays to Fridays. But that's not true. That's what your broker wants you to believe. The broker wants you to trade every day. That's why they do trainings every day. That's why they always send you signals every day, especially for brokers who offer signals. They send you signals every day, like just so you keep trading. because the more you trade, the more money they make. So you don't need all of that. You just need one good setup, one good trade for the week. And once you accomplish that trade, you're done. Go do something else. Like I said, when I started out, I was married to the chart, trading all day, trading every time, making the money and losing it all back, making the money and losing it all back. You don't want to trade like that. Once you make your money, get out of the market. Another thing you want to do also is to make sure that you always secure profit. So once you make a profit, you withdraw it. Because if you have a small account, for example, how can you have a small account and you're trying to use that small account to solve all your financial woes? Someone has $100 and they want to use that $100 to become financially independent. It doesn't work like that. Your goal for that $100 is to be able to generate some kind of sustenance, some kind of profit, so some kind of daily income, so to speak, or weekly income. So say you have $100, your goal should be that out of it, I want making $5 out of my $100. Because if you go put the $100 in the domiciliary account, it won't yield anything, it won't yield profit. It's just going to sit there. If it sits there for long, your bank will send you a message that your account is dormant, and if you don't keep it active, they are going to freeze the account. So they'll send you messages like that. But if you have $100 in the forex market and you're trying to make $5 every week, $10 every week, by the time you put it together at the end of the month, you see that you've made close to $50, you've made close to $60 and all of that. So your $100 has yielded you $60. Now what do you do with the $60? You withdraw it. So you could take that money out, withdraw it, and do something with it. It could be to, give it to your wife to go to the market. It could be to use in taking yourself out for drinks. It could be anything. Just pay your bills. That's why you're trading. Now, a lot of people come into the market, they want to impress their friends. They trade just so that they'll screenshot their results and go post it all over the place. That's good. There's nothing wrong in that. There's nothing wrong in that at all. Well, after the screenshot, what happens to the profit? I do the screenshots. I'm not saying I don't do them. I do a lot of screenshots. Go to my Instagram pages at Trades to Profit. You see some screenshots that are there. But trust me, the minute I'm done with the screenshot, the profit is out. I'm taking the profit out of the market and I'm keeping it safe where I can withdraw it, because I'm all about withdrawal. So as a trader, you should be focused on withdrawing profit, because trading the forex market, it doesn't sound interesting, it doesn't sound good, but it is commonsensical for you to focus on your money, focus on withdrawing profit. All right. So the day you are able to decide that, okay, I've made a lot of money, this thing is, let me just use $100 and try to see if I can just flip it, if I can just play with it. You're ready to do all of those things. But as a beginner, as a starter, just have $100. Don't think that $100 is going to solve your problems. No, it won't. Right? What you need the $100 to do for you is to see that you are getting some returns of it. See it as an investment. You're getting some returns out of it. So when you've withdrawn, when you've made enough withdrawal from the market, then you can now begin to say, okay, let me just try to flip this to 5,000. Let me just try to flip this to 2,000. Let me just try to. You can begin to do all of those tricks, because you're already seasoned. You're already good at it. You're already profitable. So if somebody asks you how is your forex trading going, you can answer confidently that it's going fine. Not that you've not made a dime and you want to try to compete with the guy that has probably been trading for 5 years and is coming to show you profit of $50,000. You don't want to do that, okay? So that's one of the things I said I was going to talk about today: growing a small account. Growing a small account doesn't mean you grow it and then forget it there. As you're growing it, you're taking the returns on the investment of your $100. You're taking the returns in your investment of your $100. If I grow $100, say at the end of the week, I was able to grow the $100 to $160. I'm taking $60 out. That's my profit for the week. If I'm able to grow $100, say for the week, I'm able to take it to $112. I'm taking the $12 out of the market. That's my profit. If I take it to $120, I'm taking the $20 out. Now somebody says, what about compounding? What about compounding? Like I said, you are still new. I am still new, right? Using me as an example now, I'm trying to grow $100. I'm still brand new in the market. My goal is to see that this thing actually works, to see that I'm actually making money. Because I don't want to fall into the category of people that comes to say, I funded $100, I now made $500, and then last week I now blew the $500. I don't want you to fall into the category of people that says that. I want you to fall into the category of people that said, I have made money, or I've withdrawn the money, I've even used the money self to buy fridge, I've used the money to buy shoe, I've used the money to buy bag. I want to be among those people, because when you trade like that, you are excited about the market. You begin to see the market as a business. You don't see it as something to be afraid of, so something to come and try your luck on. No, you see it as something that's actually paying you, and you will always look forward to a new trading week. All right. So I wish you a very, very profitable week, a very successful week. Till I see you again in the next Market Watch analysis. Have a peaceful week and goodbye.